Greetings to the Dinar Shift community. As we begin today's discussion, we are focusing on a series of developments within Iraq's financial landscape that have captured the attention of observers around the world. These updates collectively point to a period of significant transition for the Iraqi dinar, marked by institutional shifts and evolving international perceptions. It is crucial to approach this information with a focus on verifiable facts and a neutral perspective, understanding that economic reform is a complex and multifaceted process that unfolds over time, often with measured steps rather than sudden announcements. The narrative surrounding the dinar has been characterized by a long history of speculation, but recent institutional actions and statements provide a concrete basis for analysis regarding the direction of Iraq's monetary policy. One of the most discussed points in recent commentary involves the changing posture of international banking institutions toward the Iraqi dinar. A notable example cited by some observers involves an individual's experience with Wells Fargo, a major financial entity. According to these accounts, this individual purchased Iraqi dinar notes through the bank over 2 decades ago, a service that was subsequently discontinued by the institution in the period between 2012 and 2014. The significant detail in this narrative is the reported shift in the bank's stance in more recent times. Where the currency was once met with dismissal, the anecdote suggests the bank's position has evolved, reportedly influenced by communications from official United States Treasury channels that affirmed the legitimacy of the Iraqi dinar as a sovereign currency. This shift, if accurately described, represents a notable change in perception for those who have followed the currency's journey. For many years, the dinar existed in a space clouded by intense scrutiny and widespread skepticism, often labeled by critics outside of Iraq as a speculative instrument rather than a currency undergoing reform. A change in attitude from a major Western financial institution, based on official correspondence, would therefore mark a pivotal moment in the currency's modern narrative. It underscores a move from a period of doubt to one where the dinar's status is being re-evaluated within formal financial circles, lending a renewed sense of credibility to Iraq's ongoing monetary reform efforts. This renewed credibility, however, must be contextualized within Iraq's broader and often challenging economic history. The country has navigated decades defined by geopolitical instability, internal conflict, and fragmented policy implementation. Economic reforms have been announced, delayed, and revised in cycles that have tested the patience of both domestic and international observers. Within this context, any signal of progress, however incremental, carries substantial weight. It indicates that persistent efforts by Iraq's financial authorities may be gradually altering long-held external perceptions, which is a necessary component for successful integration into the global financial system. It is essential to interpret this development with balanced realism. A change in a bank's internal posture does not in itself constitute a final outcome or a guarantee of specific future events. Economic reform at a national level, particularly for a country rebuilding its institutions, is a non-linear process. Progress is frequently interspersed with periods of recalibration, administrative delays, and policy adjustments that can temporarily obscure the broader trajectory. These phases are not unusual in complex financial transitions. They are characteristic of systems undergoing foundational change. Therefore, while the reported shift is encouraging, it should be viewed as one datum in a much larger and longer series of data points. For analysts and observers, this environment necessitates a disciplined approach that prioritizes vigilance and factual analysis. Credibility in international finance is not built through single announcements or altered banking policies alone. It is constructed through sustained, transparent action, consistent institutional performance, and demonstrable results over extended periods. The recent indications suggest a renewed seriousness of purpose may be taking hold among Iraq's policymakers, but the path forward will inevitably require continuous scrutiny from citizens, investors, and Iraq's international partners alike. Remaining anchored in verified information is the best defense against the emotional volatility that can arise from speculation. This balanced approach, which harmonizes cautious optimism with clear-eyed analysis, is not a contradictory stance. Rather, these are complementary attitudes that together provide a more complete and resilient framework for understanding developments. They allow an observer to acknowledge and welcome signs of forward momentum without losing sight of the substantial structural and bureaucratic challenges that remain unresolved. These underlying issues, from legacy corruption to inefficient bureaucracy, continue to influence Iraq's financial future and will require dedicated, long-term efforts to address effectively. Further commentary from within the observer community has echoed this theme of measured perspective. Some voices have emphasized the critical importance of maintaining composure and emotional discipline during periods of major economic transition. Their perspective holds that transformative changes within a national financial system often manifest in ways that are not immediately obvious or easily understood by the general public. The technical nature of central banking policy, international monetary agreements, and legislative budgeting can create a gap between official action and public perception, which in turn can lead to confusion or premature conclusions. These commentators have also drawn attention to broader macroeconomic advisories, such as those issued by international bodies like the World Bank. These warnings are noted to extend beyond Iraq's borders, applying to economies worldwide as they navigate a complex post-pandemic landscape marked by inflationary pressures, supply chain adjustments, and evolving global monetary policy. From this vantage point, Iraq's current position should not be viewed in isolation through the narrow lens of a potential currency revaluation event. Instead, it is argued, the situation is better understood as part of a comprehensive, longer-term restructuring of the nation's entire financial architecture. This distinction is profoundly significant. It reframes the common narrative away from anticipation of a single, discrete event and toward an appreciation for a gradual, multi-stage process of institutional reform. Change on this scale inherently brings uncertainty, as old systems are dismantled and new protocols are established. However, uncertainty in this context is not necessarily a negative force. When managed through transparent policy and clear communication, it can create a foundation for future stability. This period can offer opportunities for analysis of emerging markets, for citizens to adapt to a modernized banking system, and for scholars to study global financial shifts in real time. The central message from this analytical school of thought reinforces the enduring value of staying informed through official channels, remaining adaptable to new information, and cultivating a level-headed approach. This is especially pertinent in an information environment where online narratives can sometimes amplify unconfirmed reports beyond what the available data supports. Emotional discipline and intellectual patience become key assets for anyone seeking to understand the nuances of Iraq's economic journey, separating substantive policy moves from the surrounding noise. Adding another layer to the ongoing analysis, attention has been directed toward specific timelines within Iraq's political calendar. Some observers have pointed to the month of January as a period of renewed legislative activity with potential implications for the reform process. In particular, focus has returned to Iraq's federal budget, a critical piece of legislation that governs state expenditures, public sector salaries, infrastructure projects, and social programs. This budget had experienced significant delays due to political negotiations and procedural hurdles, common challenges within Iraq's parliamentary system. The resumption of parliamentary discussions on this matter is seen by these observers as more than a routine administrative exercise. It is interpreted as a sign of renewed institutional momentum and engagement. The Parliament's return to reviewing the budget schedule and taking preparatory steps toward a potential approval suggests that key governmental processes, which had been stalled, are beginning to move forward once again. In the context of Iraq, where fiscal policy and monetary policy are deeply intertwined, progress on the budget is a prerequisite for broader economic planning and reform implementation. The perspective offered here suggests that such legislative movement often precedes consequential monetary actions. The reasoning is that fiscal clarity, knowing how much the government plans to spend and on what, is an essential foundation before a central bank can responsibly introduce significant adjustments to currency or banking regulations. While this analysis stops short of making definitive predictions, it frames the renewed parliamentary activity as a strong indicator that long-anticipated phases of Iraq's economic reform plan may be entering a more active stage. This optimism is carefully situated within a framework of due process, where progress is measured by the alignment of political will, legislative action, and technical economic planning. As these discussions regain traction, Iraq's financial outlook appears to be taking on a more structured and intentional form. This offers a measure of cautious encouragement to those monitoring the process, as it suggests a move from planning to execution. The deliberate pace may frustrate those hoping for swift resolutions, but it is consistent with the careful approach required for systemic change. Each step, from budget approval to regulatory change, builds upon the last, creating a sequence of actions that collectively define the reform pathway. In a parallel and highly significant development, the Iraqi government has formally announced a comprehensive initiative to overhaul its physical currency system. This policy is aimed at addressing persistent economic challenges, including inflation, the widespread practice of cash hoarding outside the banking system, and general inefficiency in currency circulation. The central pillar of this initiative is a planned, gradual phase-out of the highest denomination banknotes currently in use, specifically the 25,000 and 10,000 dinar note. These large bills are ubiquitous in the Iraqi economy. To replace these high-value notes and facilitate everyday commerce, the plan calls for the introduction of smaller denomination bills. These would include notes valued at 250 dinars, 1,000 dinars, and potentially even fractional denominations. This shift represents a profound strategic move that goes far beyond a simple redesign of the country's paper money. It is an intentional effort to modernize the very structure of Iraq's monetary system, aiming to improve transparency in pricing, encourage the use of formal banking channels, and reduce the economy's reliance on large cash exchanges for routine transactions. The economic rationale behind this policy is well established in international monetary practice. High-denomination notes, while convenient for large transactions, can facilitate activities that undermine monetary control and economic stability. They make it easier to hoard vast sums of currency outside the banking system, which reduces the central bank's ability to manage the money supply effectively. They can also simplify untraceable transactions, contributing to informal economic activity and corruption. By introducing smaller denominations, Iraqi policymakers aim to promote healthier financial habits, integrate more citizens into the banking system, and reinforce public trust in the dinar's utility for daily life. Such a reform aligns with international best practices and signals Iraq's clear intention to normalize its currency system in line with regional and global standards. The implementation will be a logistically complex undertaking, requiring extensive public education campaigns, seamless coordination between banks and businesses, and a carefully managed exchange period to avoid disruption. Despite these challenges, the initiative lays critical groundwork for a more sustainable and resilient financial environment. It is a tangible demonstration of the government's commitment to tackling deep-seated structural issues within its economy. For individuals and entities currently holding the high-denomination dinar notes, this transition period naturally raises practical questions. Within financial commentary circles, reports have circulated suggesting that these existing notes may receive specific consideration during the exchange process as the new system is rolled out. This possibility has generated a measure of optimism among holders. It is crucial to note, however, that official confirmation and detailed procedures from the Central Bank of Iraq are required before any firm conclusions can be drawn. The Iraqi government has repeatedly emphasized its commitment to transparency and public communication throughout this sensitive process. Authorities recognize that currency reform directly impacts the daily lives and savings of millions of people, making clarity and the establishment of trust paramount objectives. To that end, official announcements and educational materials are being disseminated through a variety of media channels, including television, radio, print journalism, and digital platforms. These communications are designed to explain the underlying reasons for the changes, outline expected timelines, and guide citizens through the exchange procedures once they are formally initiated. The goal is to ensure broad public awareness and a smooth transition for all segments of society. For individuals holding dinar, whether within Iraq or internationally, this period calls for a posture of preparation rather than speculation. Prudent steps include organizing relevant documentation, such as proof of purchase and identification, and identifying legitimate, reputable financial institutions or exchange services that will be authorized to facilitate the process. Relying exclusively on confirmed sources of information, such as statements from the Central Bank of Iraq or the Iraqi Ministry of Finance, is the most reliable way to navigate this transition. While unconfirmed reports may suggest specific dates for notifications or exchanges, official timelines should always take precedence. Being proactive in gathering information and getting documents in order can reduce stress and minimize the risk of decisions based on misinformation. Another major development reinforcing the scope of Iraq's reform agenda is the suspension of the country's long-standing electronic dollar auction platform. For many years, this mechanism served as a primary conduit through which U.S. dollars entered the Iraqi financial system. The stated purpose was to stabilize the local currency and facilitate essential imports and trade. However, over time, the auctions became associated with significant systemic problems, including a lack of transparent oversight, opportunities for financial abuse, and allegations of corruption. Substantial volumes of U.S. currency were able to leave the country with limited tracking, contributing to what economists call currency leakage. This phenomenon undermined the Central Bank of Iraq's control over the domestic money supply and placed downward pressure on the dinar's value. The decision to dismantle this platform and replace it with a new, more tightly controlled system represents a decisive and critical shift in policy direction. Iraqi authorities have stated that the new framework is designed to strengthen oversight, reduce opportunities for abuse, and ensure that foreign currency flows are aligned strictly with legitimate trade and verified economic activity. This move reflects a broader effort to strengthen Iraq's regulatory institutions and assert more effective control over its monetary policy. While the transition away from the established dollar auction system may introduce short-term adjustments and require the development of new administrative competencies, it directly addresses a long-standing vulnerability that has hindered economic reform for years. By confronting this issue head-on, Iraq signals a clear willingness to prioritize structural integrity and long-term stability over the convenience of a flawed but familiar system. The suspension is therefore not merely a technical adjustment, it is emblematic of a deeper commitment to reforming financial practices that no longer serve the nation's economic interests. The implications of ending the dollar auctions extend far beyond a single policy change, touching nearly every facet of Iraq's economic ecosystem. A more transparent and controlled foreign currency system has the potential to strengthen the dinar fundamentally by reducing speculative pressures and limiting unregulated outflows of hard currency. This, in turn, could enhance confidence among both domestic businesses and international investors, who have historically been wary of inconsistencies in Iraq's monetary management. For companies operating within Iraq, the combinati of smaller dinar denominations and improved currency oversight could lead to more efficient commercial transactions, clearer pricing, and a gradual shift away from informal cash-based practices. These changes are also intended to encourage greater participation in the formal banking sector, which is a cornerstone of long-term financial inclusion and economic development. As more deposits enter the banking system, institutions can increase lending to businesses and individuals, fostering growth. Travelers, expatriates, and foreign entities will benefit from understanding the evolving currency structure, as it will lead to more predictable exchange processes and fairer valuation. Adaptation, however, will be key. Transitional periods demand patience, a willingness to learn new procedures, and a steadfast reliance on accurate official information to avoid confusion or missteps, while significant challenges remain, particularly in the consistent implementation and enforcement of these new rules. The strategic direction is unambiguous. Iraq is adopting a more disciplined and modern approach to monetary governance. As these reforms take root, the country has the potential to become a more predictable and competitive market, an outcome with positive implications that reach well beyond its own borders. The end of the dollar auctions, therefore, represents a clear statement of intent. Iraq is demonstrating a preparedness to confront entrenched financial problems directly, rather than managing their symptoms indefinitely. By prioritizing transparency, regulatory control, and institutional reform, the country is exhibiting growing confidence in its capacity to steward its own economic destiny. This determination has not gone unnoticed. International financial institutions, regional neighbors, and global economic observers are monitoring this phase closely, aware that Iraq's relative success or failure in this ambitious overhaul could influence patterns of regional investment and stability. At the same time, a measured perspective remains essential. Structural reforms of this magnitude require sustained political consensus, consistent technical execution, and the gradual building of public trust to succeed fully. Setbacks or bureaucratic inertia could slow progress. For this reason, a sense of opportunity and a need for caution exist simultaneously. Those engaging with Iraq's reform story, whether as analysts, international partners, or citizens, must balance a recognition of progress with continuous due diligence. The road ahead is undoubtedly complex and will require perseverance. However, the direction of travel is now more clearly defined than in many previous years, suggesting Iraq is consciously moving from a posture of reactive policymaking toward the construction of a more intentional and resilient financial framework for its future. At its core, this collection of interlocking reforms, from currency restructuring to auction suspension, aims to establish a durable foundation for long-term economic stability and growth. Iraq's modern history has been profoundly shaped by external conflicts, volatile oil prices, internal security challenges, and institutional fragility. Each of these factors has left a deep imprint on its financial system and its citizens' lives. The current moment, however, reflects a distinct sense of urgency and resolve that differentiates it from earlier, less coordinated reform cycles. There appears to be a growing awareness among Iraqi leaders that sustainable development requires more than temporary fiscal fixes or isolated initiatives. It demands coherent, mutually reinforcing policies, credible and capable institutions, and a deliberate integration with accepted global financial norms and practices. The international community widely recognizes the high stakes of this endeavor. Successful reform could unlock new flows of foreign investment, help diversify economic activity beyond hydrocarbons, and gradually strengthen the dinar's standing, generating positive ripple effects across regional and global markets. Conversely, significant struggles or reversal could reinforce existing skepticism and prolong economic instability. This duality underscores the profound significance of the present phase. While the scale of the remaining challenges is substantial, the apparent alignment of fiscal, monetary, and regulatory efforts suggests a more holistic and coordinated approach than has been witnessed in many years. For observers and participants alike, this period represents a notable convergence of risk and potential. The policy choices made and implemented in the coming months and years will shape not only Iraq's domestic economic trajectory but also its role and relationships within the broader global financial landscape. For individual observers of this process, particularly those with an interest in global finance, this period represents a unique moment to study a national economy in a deliberate state of transformation. The potential strengthening of a sovereign currency through reform is a subject of inherent interest. It is crucial, however, to proceed with thoughtful analysis and a clear understanding of the broader macroeconomic context. All financial systems carry inherent risks, and transitions amplify uncertainty. Informed perspective is always more valuable than speculative reaction. Stepping back from daily headlines and fragmented reports, it becomes essential to view Iraq's currency reforms within a larger, more meaningful context. This initiative is not merely about numerical adjustments to exchange rates or the technical mechanics of monetary policy. At its heart, Iraq's decision to reform its currency system represents a strategic effort to build a more stable, functional, and prosperous future for the nation and its citizens. By directly confronting long-standing issues like inflation, currency hoarding, and inefficient cash circulation, Iraq is signaling a commitment to economic normalization and modernization. These reforms aim to create an environment where prices are more transparent, household purchasing power is more predictable, and trust in the national financial system is gradually restored. A modernized currency framework supports stronger public institutions, healthier commercial banking practices, and improved integration with regional and international markets. Over time, this can translate into better access to credit for small businesses, more efficient cross-border commerce, and greater confidence among both domestic and international investors who see clear and stable rules of operation. Importantly, these changes are designed to benefit everyday citizens as much as large-scale economic actors. A stable and trustworthy currency helps families plan their budgets, enables businesses to operate with clearer forecasting, and allows the government to allocate resources for public services more effectively. While the progress may be incremental and the transition at times inconvenient, the broader objective remains clear: to foster a resilient economic ecosystem capable of supporting long-term growth, creating opportunity, and sharing prosperity more equitably across Iraq's diverse population. This is the fundamental promise of sound monetary reform. Beyond the economic metrics and policy frameworks, there is a deeply human dimension to Iraq's currency journey that deserves recognition. For countless individuals, both within the country and in the diaspora, the dinar symbolizes more than a medium of exchange. It represents hope. Hope for financial security after years of turmoil, hope for restored national stability, and the possibility of realizing personal and collective aspirations that have been deferred by decades of uncertainty. This emotional connection underscores why currency reform carries such profound significance that extends far beyond central bank balance sheets and technical statements. The story of the dinar is intertwined with the lived experiences of millions of people who have endured conflict, hyperinflation, and institutional disruption, yet continue to demonstrate remarkable resilience and determination. As reforms move forward, patience becomes as vital a virtue as optimism. Transformational change of this nature rarely happens overnight, particularly in systems shaped by decades of structural challenges. Setbacks, administrative delays, and necessary policy adjustments are an inherent part of the process, not necessarily signs of failure. Recognizing this inherent complexity helps temper expectations while maintaining confidence in the stated long-term direction. The narrative unfolding around the dinar is ultimately one of national perseverance. It is the story of a country seeking to reclaim its economic agency and rebuild trust in its public institutions after a prolonged period of difficulty. By maintaining a perspective that honors both the progress achieved and the work still ahead, observers can better appreciate the human stakes embedded within these technical reforms. The success of this endeavor would mean greater daily security and opportunity for the people of Iraq, which is the most meaningful measure of any economic policy. As attention turns toward the future, There are several practical and constructive steps that individuals following this story can take during this period of implementation. Staying connected to trusts. TED and credible information sources is paramount. This means prioritizing official communications from the Central Bank of Iraq and the Iraqi Ministry of Finance, as well as analysis from reputable international financial institutions and established economic news outlets. In times of significant transition, misinformation and speculative rumors can spread rapidly, making discernment and source verification critical skills. For those who hold Dinar notes, organization and preparedness are key practical principles, ensuring that all relevant documentation, such as certificates of ownership, purchase receipts, and proper identification, is accurate, secure, and easily accessible can reduce potential stress and confusion should formal exchange procedures or registration deadlines be announced. This period also presents an opportunity for deeper education. Seeking to understand how currency reform fits into Iraq's broader economic strategy, including its fiscal policy goals, banking sector modernization plans, and international trade agreements, can provide invaluable context. This broader knowledge empowers more thoughtful analysis and planning. It shifts focus away from a narrow fixation on potential outcomes and toward a clearer evaluation of the processes, risks, timelines, and structural goals that define the reform journey. Preparation in this sense does not imply a state of urgency or alarm. Rather, it reflects a calm, proactive, and informed mindset. By remaining informed through official channels, getting personal documents in order, and cultivating patience, individuals place themselves in a stronger position to respond effectively and calmly as verified developments are announced and implemented by the responsible authorities. Ultimately, this journey extends beyond individual perspective or isolated financial interests. Iraq's currency reforms are part of a broader national effort to build a stronger, more stable, and more transparent economy. By extension, progress in this area contributes to a healthier and more predictable global financial environment. Economic stability in Iraq has implications that reach beyond its borders, influencing regional trade patterns, international investment flows, and broader geopolitical dynamics. By engaging thoughtfully and accurately with this process, whether as an investor, an analyst, or simply an informed observer, one participates in a larger global narrative of economic recovery and institutional reform. Staying accurately informed and advocating for transparency helps reinforce accountability and constructive dialogue around these critical changes. While individual actions may seem small, collective awareness and responsible discourse contribute to a climate that values factual information over speculation. This moment in Iraq's history calls for a balanced approach, optimism grounded in verifiable fact, patience paired with prudent preparation, and hope informed by a clear understanding of the complexities involved. Iraq's path forward is neither simple nor guaranteed a smooth passage, but it is increasingly defined by a visible commitment to intentional reform and a long-term vision for its economic sovereignty. By recognizing the broader significance of these efforts, observers can move beyond short-term expectations and appreciate the deeper purpose at work, the building of a foundation for sustainable growth, shared stability, and a more secure future for coming generations. The story of the Iraqi dinar, as it continues to unfold, is one of gradual transformation, from international skepticism toward renewed credibility, and from profound challenge toward structured opportunity. It mirrors Iraq's own broader economic evolution and its determined effort to move forward. As we in the Dinar Shift community continue to follow this journey, let us remain committed to factual reporting, grounded hope, and a prepared understanding for what lies ahead on this path of national economic reform.